Hello everybody, welcome. My name is Pete Renzulli, Class B member, T3 Trading Group, which essentially means that I'm a trader here for the broker-dealer. What we'd like to do is I'd like to bring you a little education piece for the weekend, take you into the weekend, get into a little bit of the headline news of what's going on now, which is a little bit unusual for myself because for those of you that trade with me in the private mentoring room with Evan Lazarus in the active trader room, myself and Evan are not really news-type catalyst traders. We're much more geared towards technical analysis, setting up trades, and getting those trade setups 100% from the charts. We might use news as a catalyst to eventually get into and set up a technical trade, but I'm not so much really into interpreting the news myself, and which actually brings me to setting up your own personal trading plan. It's very, very important to recognize where you're getting your trading ideas from, and being a technical trader is very different from being somebody who trades the news or is looking for the news or scanning headlines and that kind of thing. You could do it in kind of a reverse engineered way where if you're using a news story to eventually trade technically, it's not the same as soon as the story comes out, you're trading it or forming an opinion based on your interpretation of the news where you anticipate price to go. Now that second one is very, very important. If you are a news/trader, which it could mean fundamentals, it could be just a headline, it could be anything along those lines, that essentially means that you're interpreting the news or the earnings or whatever it happens to be, and you believe your interpretation is going to be in sync with the eventual direction of that news. So I want to tie that back into actually a trading scenario of what's going on in the market right now, which everybody's favorite terminology right now, the fiscal cliff. Okay, it's on everybody's lips right now. There's the stock market for basically the better part of November. This is filming this November 30th, end of the month. Now, here's where I want to tie this in because I started this out with the very distinct differences between a news trader and a technical trader, and I want to bring them back to how being a technical trader and a smart tape reader to pay attention for what you believe should happen versus what is happening. So I want to get I'm not going to actually pull up live charts, but I want to pull up what is going on where there's been comments that have been perceived as very bearish, or the market would, for those of you who know what bearish means, which actually we can get into that for a second. Bull actually strikes up and a bear strikes down. That's where bullish and bearish comes from. So bearish coming down. And then you get yesterday where there were some comments that nothing is changing, there's no progress, but the market didn't sell off. So I want to pay attention to what the market's telling us. This is what happened for the majority of November. Then we had what you would call an outside reversal candle to the upside, which essentially means this big green candle was completely outside of the previous one, and it happened on bigger volume. Now, whether you want to call it an accumulation day, you want to call it a spark, whatever the heck you want to call it. This is all after and continuing into Fiscal Cliff news. Now, what happened after that? We had that big day, and let's just color that as a green candle. We had a gap the next day, more confirmation of buying here. We went sideways for about 2 or 3 days, had another gap to the upside, went sideways for a couple of more days, had a third gap, and then actually an outside candle reversal and then another gap. So we had 2 outside candle reversals, which were very bullish, and we had 3 gaps to the upside, all within a 2.5-week period. Okay, now, why is that so significant? In and of itself, it's very constructive price action, but what's making that a little bit more significant from a trading perspective, in this world where it's so easy to get overwhelmed and overinformed with how much is getting talked about with the fiscal cliff, price action itself is talking right now and saying, in spite of news that should be pushing us lower, we have not gone lower. And to take that even a step further, during these consolidations after the gaps to the upside, volume has actually been decreasing, which from a technical analysis perspective, when you push higher, you have good action from institutions, or however you want to interpret that, there's buying pressure in this case. And you should see an increase in volume to the upside. And when the stock pauses, slows down, goes into a consolidation, whether you want to call it a flag, a pennant, whatever it happens to be, if it's on decreasing volume, that essentially is telling you the preceding push to the upside, momentum, which in this case would be a pull for a flag, which is the pause. It's good price action if this pause happens on decreasing volume, which is actually what we're getting right now. So we had a monster reversal day, followed by 3 gaps, another reversal day, and another gap, light volume days, and we're not selling off. So essentially what I'm teaching you here, what I'm walking you through, is how to interpret the price action and what it's telling you, as opposed to trying to interpret the news. Okay, I'm not saying it can't be done. It's a skill and something that takes time. But what we can absolutely take a look at is, what is the chart telling us right now if we had no clue Fiscal Cliff was in the news and out there every day? So to make that even more significant, the fact that we do have this Fiscal Cliff news, and it's still in the news every day, and everybody is talking about the tax cuts expiring, et cetera, et cetera, et cetera, and what's going on with all the politicians fighting back and forth, there's no heavy selling going on right now. So the market itself, this is called tape reading. Tape reading is talking to us right now, and as of right now, we've had some pretty significant technical action, as Scott, Mark, Evan, and everybody's going over every day in the morning call and the recap, and we're not seeing heavy selling in relation to the news right now. So we must be paying attention to that. So as a trader right now, no matter what you believe is going to be the consequences January and moving forward, as of right now, we're teaching you to pay attention to the price action and not trade your opinion. It's far more important to be managing risk based on what is happening versus what you expect to happen. This is what's happening right now in spite of that. Now, interestingly enough, that's a little bit longer term perspective off the daily charts. I actually want to tie this in with something that we covered in tremendous detail this morning in the Active Trader Private Mentoring Room. So if you could just give me 1 second. This is a little bit more advanced tactic. It's a little bit more advanced tape reading technique, but it's something that you should absolutely know. And it's called identifying a natural buyer or seller. Now, here's what I want to get across, and I'm just going to use some simple numbers. Okay, that's what we have. That's called a level 1 bid here, where it's bid at $20. That's what somebody's advertising to buy. 20.01 is what it's advertised to sell. Now, the ways to actually get involved in a trade is you can advertise to buy yourself. Somebody would have to sell it to you, or you can buy somebody else's shares. So this is here the bid, and this is called the ask, or it could be called the offer. So these are advertisements. If you see an active trade happening, in other words, you want to buy but nobody's selling it to you, you have to take somebody else's shares. That happens over here in time and sales. You'll actually see a trade go off. So time and sales is the active part of the trade. This is the advertisement. That's the active part. So let me actually just put that in there like that. So what ends up happening is the active trades are people actually stepping up and saying, I want to be involved or I want to get out. Red prints mean it's a lower trade than the previous one, which means it's active selling. Green prints mean it's active buying. So when you get, just for argument's sake, let's say we get, in this particular stock, whatever it could happen to be, when you get a consistent print in time and sales that's red, that means that there's a lot of active selling going on. Somebody's stepping up and saying, I need to take action because I have a sense of urgency to put the trade on. Now, what should happen when that happens is if this active selling is greater than this advertised buying, in other words, the people that are saying, I'm willing to buy it at this price, if this is greater, price should go down. So when you're reading time and sales and watching the tape reading, you should see this price move down with the consistency of what you see here in what's called time and sales. Time and sales is the actual transaction. So in this window here, a lot of aggressive selling should make the stock go down. Now, here's the point that I'm trying to make, and tying it back into what we're seeing on the daily charts in the spiders, for example. Okay, this is what should happen. Okay, this stock should go down based on the amount of selling. If you see this happening, and let's throw on top of this, let's say for argument's sake you're watching the spiders and the spiders are going down. The spiders are getting hit really hard on an intraday basis, and you're seeing a lot of active selling in the stock that you're watching, simply watching time and sales. This stock should go down because of this and because of this. So the market's going down, and there's active sellers stepping up and say, I got to get out of this stock. I'm going to sell it at any price. In this case here, the price should naturally go down with those two things happening. If it does not, which is very similar to what we're seeing on the bigger picture in the market right now. Now, again, we talked about this live while the market was unfolding, and I'm going to tell you the stock in a couple of seconds. That's really where the learning comes in, when we can walk you through and say, okay, this should be going down, and I'm going to explain to you what I'm watching for the reason that I see that I was actually short this position, and it did not. I said I'm covering this, which is the terminology to get out of a short sale, because of this. So what ended up happening was, all of these transactions that were hitting the bid, that's the terminology, the stock was not going down while the market was going down. So it was showing relative strength. So in this case here, there was what was called a natural buyer. So in other words, the buyer was sitting on the bid, continuing to advertise, I'm going to buy stock, I'm going to buy stock. Now, we say natural buyer because he's just sitting back there and he's taking stock that people are actively selling. What would have to happen for this buyer to now show his hand? Well, it's very, very simple. If this active selling dries up and they realize the price is not going down, and this buyer, whoever this happens to be, still needs more stock because of their perceived value of where the stock is going to be in the future, they are now going to have to start to pay somebody else's price if this stock starts to dry up. And you will start to see them doing that in time and sales, where now the sales that became from red, they're going to start to turn green more aggressively, because when large institutions need stock, it's more important that they get the shares than get the exact price, because they're positioning for a much longer move. So in this case here, the stock that I was watching today, which you'll see on the charts, was Juniper, JNPR. The market was coming in a little bit. The stock has had a nice rally for the last 6 to 8 days. So during the private mentoring today, we were watching the stock on the tape. There was very active selling, and it actually went down a little bit. The buyer did not leave the bid. It maybe dropped a dime, came back in, and the stock moved up and pushed up while the market itself was going down. So it had relative strength over the last 5 to 7 days, relative strength intraday compared to the market. We were seeing selling, but the natural buyer continued to hold the bid and was not dropping it. He still needed more stock. So what would end up happening next, if the drying sells up, if the selling dries up because they're seeing it's not going down, it could be anybody, now this buyer who still needs stock is going to start to step up and pay this price. So we're kind of seeing that on the bigger picture, but what I'm just walking you through now is what we talked about for probably about a half hour, 45 minutes in the room. And another thing that you could actually use this with is, let's say a stock trades up and gets up to a resistance level. You really want to learn how to do this at significant levels, like a breakout level. There's been Monsanto a couple of days at 92. Qualcomm, I believe the price was 63. If you want to learn how to do this, again, it's not as easy as it used to be prior to all the decimalization, but you can still learn it if you're paying attention to it at significant levels. When a stock gets up or down to a significant level, you should be watching time and sales to see if it got up to that level and buyers are now going to step up because they need stock. You should see consistent, bigger green prints, which is active buying, and the same thing on the opposite side. If a stock is pushing down and it looks like it's going to get through there, but all you see are 100 share prints and consistent 100 share prints, it's not as much volume and not as much commitment. Bigger, consistent prints is commitment with real money. So you don't want to be watching it all day. I don't want to give you that impression. But when you notice it at significant levels, or when there's obvious relative strength or weakness in a stock compared to the market, that stock is telling you something. There's probably a natural buyer or seller in there. It's a very advanced technique, but it's kind of cool to understand and learn what's actually going behind the scenes of what is actually happening in the market that you ultimately see on the charts. So two different trades, one on the charts and one actually getting all the way down into the level 2 time and sales, and actually as an intraday trader, what an experienced intraday trader would teach somebody. Which actually brings me to the last point. Starting December, T3 Live, we have had some discussions lately. We're going to be offering free trials, free 5-day trials into our private mentoring room with myself, Evan. There's the Momentum Room with Mike Lee and Steve LeVay, Swing Trading with Scott Redler, and or the Candlestick Breakout Room with Rob Smith. So all we have to do is sign up, give us your name, your email, contact us. You'll see a little form below here. Somebody from our team will follow through right away and get in touch with you. Each free trial is the first and third week of every month. So like we're heading into the end of December now, all you have to do is fill out the form. We'll contact you right away. Fill out the drop-down box. Let us know which room you would like a trial for. And this is the kind of stuff that goes on in the room every day. The mentoring is really where the real learning starts. You could learn what to look at on a chart anywhere, but it's when you start to like really get into this stuff and say, I don't understand, I'm short, the stock's not going down. We can have a great conversation like this, and you can say, you know what, I didn't do anything wrong, something different changed, or there was a real buyer in there, not a big deal, just kick the trade out and look for the next one. All right, everybody, have a great weekend. Hope to see you in that free trial. Pick which one you want, and I will see you soon.